Hello, fellow traders. 'Tis I, the Rumpled One. Monday, October the 29th, the year 2018. Let's talk trading. Trading the weekly open and gap. I had a trader wanted me to go in a little more detail about the weekly open and gap. Uh, and, and as I explained to him, I said, well, I'll do a video, go over it. I thought I had done some in the past, but hey, it's okay. I can shoot another video about it. But the thing is, it's really a very simple trade. There's really not much to know or anything about. The only thing you have to remember is your money and risk management. Always have your money and risk management in place on these trades. So I dusted off an old um, indicator. Actually, I just loaded it, found the template for it, the 2010 gap zone. But you really don't need that indicator. It just shows you the previous week close and the weekly open. And so we're looking here at the euro yen, and there really wasn't too much of a gap, only a 2 pip difference. But we can just, cycle through the pairs here and see what we have. And starting here, okay, here's a little bit bigger gap. Oh, wow, not really that much. It's only 4 pips. But you can see here, here's the open, and there's the close. So you want to fade the gap heading this way. And as you can see here, the gap closed later. So how would you trade this? Well, the week opens, right? Because here's the previous week's close. So the week opened here. And so do you just want to trade that gap? Well, it's only 4 pips. So you just say, you know what? I'm not even going to worry about that. I'm just going to pass. Now here's one. There's a 10 pip. And you can see here's the open, there's the close. You go, okay, maybe I'll take that trade. And then you see, so maybe one of the first things is how big is the gap? Do I want to trade it? And another thing you might want to take a look at is you look at the previous day, or you look at the daily chart and you say, well, hey, we had we had 2 bull candles. Okay, we've been bouncing off here. So we closed here, we opened down. Maybe we can get a fill. That's one way to analyze it. You could also look at the week chart and you say, hey, here's a doji, so buyers and sellers aren't really sure. And you can see we've kind of been moving off of a bottom. There's a turn trade, bear followed by a bull. And so you can see it's going up. So might have been a good bet there. We're looking at hindsight, but there's a few where we don't have any gap fills. So we'll be able to analyze those. Once again, you can just see here, just eyeballing it, not really worth it. Once again, that's a very small gap. Another small gap. But now here's a nice one. Once again, weekly open, previous close. Okay, so if you scrunch the chart, you can see here on the hourly it was bouncing, but maybe you take a look at the daily. See, you have 2 bear candles in a row. And you got this long tail here. So possibly there might be some buyers want to push it back up. And you can see what happened. It pushed it all the way up into the previous day's upper wick zone and returned out. So seeing that it opened in the wick zone and knowing it wants to go out of that wick zone, and you can look at the week. Once again, we had 2 in a row. We've seen that before, right? So there's a small one, not really worth trading. That one's 13 pips. So here, we'll look at it again. Take it just a peek at the daily. Okay, we had a turn trade set up there. You can see here off of this area where it's bounced a few times. You can see we got this ranging here. So we're looking at the daily. Once again, it gapped down. So you can take the trade to the long side. And then you look at the week. We had 3 in a row. And those of you who've been with me for, a decade or so probably remember the buzzard reversal, where if you get 3 or more same candle colors in a row, usually we have red, green, but here we got black, white. So 3 blacks in a row, look for a reversal, 3 or more whites in a row, start looking for a reversal. You can see here, 1, 2, 3. See, there was a tiny here, but it still faded the gap. Would have not quite paid off, but there was money to be made. And you can see here the reversals. And because right now we're just looking to fade that gap, pick up, take advantage of this. So right here, had you faded the gap, you see here, there was some money to be made. You went up here, if you stuck in it, you see it opened here, it peeked through, so chances are you should have scratched that trade, or maybe depending on where you put your stop loss. Now, where would you put your stop loss? Well, do you want to trade? You could put it at, say, well, if I'm going for, in this case, if it's going to close 13 pips, maybe you put a 13 pip stop loss. Or maybe what you do is you trade half your normal and say you put one at 13, and maybe you could always add on if you see price action pushing you back towards that close. So that's up to you. You have to decide. That's one way of seeing it. You could do a 1-to-1 risk reward, or you could just go for a handful of pips saying, hey, if I get in this trade, it just makes me even picking up part of the gap. You can punch out, let the rest ride, and see what happens. So you can see here, we went in and out, in and out, in and out. Finally, we filled it right there. Got close here. The fill was there, and then it shot through. So remember, the weekly open is crossover is a good trade. So if it goes the wrong way and it hasn't filled the gap, don't try the crossover. Here, you would have had it there, a few pips. Here, had it again, comes back a few pips. Here, once again, a few pips. And then here, you would have closed it. Here, it went back through. Now, if you traded that weekly crossover to the downside, there was money to be made, okay? And then right here to the upside. So that's how to see it. Okay, you can see not much of a gap. Once again, here's a nice gap. Just from the get-go, it started going up and closed. Okay, here it's only about 5 pips, not much. You could probably pass on that. Ditto on the euro yen. Here we have, okay, that looks like about 17 pips. Weekly open, as you can see, it still hasn't filled it. So once again, you might want to trade the weekly open crossover to close that gap. Euro, we got a few pips here, about 11. Here it started off, came back, scratched that trade. Once again, taking the weekly crossover would have been profitable. You can see here a couple more weekly crossovers that would have paid off. Okay, here that's not even 10 pips, but maybe you like trading this pair and you just go ahead and take that trade right here. Once again, here, just a few pips, not really worthy. Here's 14 pipper. You can see here it opened and just closed that gap from the get-go. But one of the things on these, sometimes you might not get it because it might have had a 10 pip spread to open the week. You don't want to pay a premium. That's something else to just remember. You don't want to pay a premium, so you might have to wait an hour or two to get in the trade. Okay, they're on top of each other, no gap. That's a 14 pipper right here. It closed on the very first hour. That was only 7 pips, not much of one. Another thing you can see here, when price gets in this zone, it usually likes to leave the zone. This is another zone you can think of, is the weekly gap zone. I don't really mention it much, but it's something else. You can just see it with your own two eyes. Price gets in this zone. That's why I made the indicator. Price likes to leave the zone. So you can see here, it's real simple. You've got a 5 pip range. So if you took it, okay, here's the weekly open. Here's the previous week's close. So you'd be wanting to trade short. So if you take that short trade here, and it doesn't make it, you would, scratch or stop out. But let's say you take the short on the previous week's close out of this zone, you'd go short. Well, your stop loss would only be 5 pips away. And so in this case, it came in the zone. If you take this trade here long, your stop's only 5 pips away, so it dipped in, and you say, okay, it's been coming back through, so you jump in here, you've got a 5 pip stop loss, and look at what happened. So once again, you can trade the weekly gap zone. That was good for 37 pips. It's not a bad trade. So you can just sit back sometimes and see if price is in this zone. Once again, here's the open, there's the close. In that second hour, hopefully the spread was normalized and there was a nice trade. But you can see here it dipped in the zone. If you took that out, and you see this big candle here needed to get filled, which it did. But then there's another big one here that needed to get filled. And we'll talk about big candles, large candles later. Only 4 pips. But once again, when it's a small zone, you can it's almost like a buy zone off the weekly open, but it's between the weekly open and previous close. Just another zone to trade out of. And once again, small. This is only 2 pips. I mean, you're just basically a horizontal line when it's that close. So you're just trading a crossover there. And here we've got one nice 12 pips. Here's the open. You want it to trade short. Or if you trade out of the zone, you can see here, it was profitable. It did close. And here's a nice 9 pip range. Once again, from that first hour, it just went ahead and shot and closed the gap. Finally, here with the dollar yen, only a 7 pip range. Weekly open. And what happened here, it did close the gap. It moved out of that range. So see, it gets in this range, comes in here, closes, see what happens next. Take the trade out. That would have been a loss right here. Turn around, go the other way long. And here you got another chance to get in, dipped in. And it was profitable. So I hope that helps answer the question from the trader wanting to know more about the weekly open and gap. So we've got the weekly open cross trade, we've got the gap fill trade, and we've got the gap zone trade there, just off of 2 horizontal lines. Well, plenty of pips to be had. And it's up to you. Because remember, it's not what you trade, it's how you trade it. So get out there and drain the banks this week.